Kenya's Uchumi Supermarkets will increase its authorised share capital and offer 100 million shares in a rights issue. The retailer, whose shares resumed trading at the bourse last year after a 6-year suspension due to insolvency, said that it would create 200 million new ordinary shares of 5 shillings each. Joining us for more insight on this decision is Jonathan Ciano. He's CEO of Uchumi Supermarkets. Jonathan, thanks so much for joining us this afternoon. Well, we've seen the markets reacting pretty badly to this news today. The share price down over 3%, and this as shareholders fret about the kind of impact this is going to have on on holdings moving forward. Run us through the rationale behind this rights issue and what it means for your growth moving forward.
Thank you very much. My name is Jonathan Ciano, CEO of Uchumi Group of Supermarkets. We are seeking for approval, clearance by our shareholders to expand our nominal capital and therefore be able to raise funding from our shareholders through a rights issue. This has been necessitated by our growth rate that is going on within the region. It's our hope that we'll be able to enhance our presence strategically in the Eastern African community countries, and that is the purpose of the raising of funds through a rights issue. Thank you.
Take us through where exactly you're chasing this opportunity. Is it confined to the East African region specifically?
Well, it is the whole of East Africa. I must be open on this one. There is no new. East Africa is saying the 5 countries in East Africa have got a lot of potential. Likewise, in the countries we are already operating in, and this is Kenya, Uganda, and Tanzania, we want to go deeper into the market and be able to get the benefit of where we are, because the region is growing. Definitely, we probably pick that from the economic journals that the East Africa region is growing, and we want to grow with it. And that is the main reason Uchumi is deepening its presence within those. And we have the other 3 countries within East Africa, which we say, if we have the funding, then we should be able to open our new branches there.
Within what competitive landscape specifically, Jonathan? I mean, how are you assessing your competitive muscle right now? I mean, specifically in Kenya, we've heard of a Mauritian retailer that's identified this very same opportunity and looking to set up shop and pursue its growth strategy pretty aggressively as well.
Now, any market that has no competition is still completely, and that is how we are brought up in our own experience and exposure. We have competition in the whole of the Eastern African region by very many supermarkets. Some of them are South African, others are Kenyans, others are Tanzanians, and others are Ugandans. And I think that is how the market should be. Likewise, you find very small players within these markets. And therefore, what you find is when the ground has become more slippery, then the smaller players will find it more difficult to sustain because the margins are going to be much lower. And therefore, the organizations that have higher efficiency rate, operational efficiency, are the ones that will remain. We have also got areas where you find development of the retail supermarket is very low. It is not very well penetrated. That is where we are going to be the pioneers. Thank you.
Jonathan, of course, as I said at the top, I mean, all of this comes through after you've resumed trade at the NSE for, the past year or so, and that after a 6-year suspension as a result of insolvency. To those who have said you're possibly doing too much too quickly, what's your response?
Now, let me be very clear here. We have what we call cautious outreach. We can never mark it as growth, but it is not the number of supermarkets that count. It is the value. Within 1 year, we have just opened 5. If you look at the 5 outlets in the Eastern African region, if you look at what our competitors have opened, they are many more than that. But that is not what we are going for. So, and the growth that we are looking at is the next 3 to 5 years. Again, that is very low, but quality. I think that is what matters. No matter how many branches we have, we don't count our branches like Africans don't count their children. We don't count our branches either. We look at what you call we have precipitated in terms of sales, revenue, and in terms of customer numbers. And that is the way we are going. Thank you.